Hello, Perennial Pride listeners. Thanks for joining me today on this podcast. So at the time of recording, here we are in spring, which is I love this time of year. Obviously, I like the warmer weather. So when things are blooming, you started getting out of the phase of winter and the frigid air. And, you have things like golf, the Masters are around the corner here. And the unfortunate reality is what most people are facing now are the tax deadline, the April 15th tax deadline. And at the time of this recording, we're also dealing with a big topic of tariffs that really wasn't in most people's minds, but is a form of taxation. And, so today I'm going to cover kind of broad topics around taxes. And I actually enjoy talking about them, which is a crazy thing. I'm not a CPA or tax professional. However, I know quite a number of them, and something that I know is potentially a massive sort of impact to our financial being and ability to grow our wealth. Because, when you look at it very broadly, it is clearly our biggest expense, especially for those who are, successful in their jobs, in their businesses, or investments. That taxes are going to be your biggest expense and prevent you from keeping more of what you have now and even in future generations, especially if you're that successful. So it really pervades a lot of our lives, and it should be a part of what you're doing strategically to think about your wealth. So I'm just going to cover broad strokes around it. And the reason I think about it in a positive way, because just like anything, it's just a different perspective. Obviously taxes we're supposed to be a temporary thing, but now they're here to stay. It's been over 100 plus years since it's really been officially put into place. And, it's growing and getting more complicated. And so it's a part of life, and it shows up in so many different ways. And, when you look at taxes and anything that's kind of smells like taxes that are maybe more sort of stealth versions of it, and we'll go through that a little bit more. Really, when you look at them and really step back, they're really put into place to drive behavior. And there are incentives that are put into place by the powers that be and at government level to really drive us down a certain path. And if you just kind of learn and sort of appreciate that, then at least gives you an opportunity to maybe consider what to do about it and potentially make it an opportunity for you. So, that's where I'm going to try to position today in a more positive sense of taxes and kind of how we can position ourselves, our families, our businesses, and personal finances, position in a much more positive way and allow us to keep more of our wealth, but also support what, the government wants us to do in general, which is why they're there to begin with. So let's just think about taxes in general. And for what most people equate to it, there's a lot of different forms of it. And, it could be in a form of, especially if you're a worker, income tax. That's one that most people are knowledgeable about, where most people start, having a job. And obviously for folks who are high income earners, especially at the federal and state level income tax, that could be really penalizing for high income earners. And so this is what you often hear, especially in high tax states, that it can be a burden and almost take, 40, 50% of your income, especially at the top tax brackets, and siphon them off to the government to use. So it can be very painful for folks. And unfortunately, the tax laws are not really designed as well around the employee as much, because that's not what they're trying to incent. And, when you sort of just move it back to the old Robert Kiyosaki sort of approach of the, employee and the self-employed on one side is taxed the worst. And then you have on the other side, business owners and investors are taxed at the lower end. So it just gives you a guide as to where you want to sort of grow and aspire and maybe focus some energy is to kind of get to that right side. So certainly we highly recommend sort of reading the book Rich Dad Poor Dad, other, approaches to kind of thinking about taxation. But, obviously employees and self-employed, earning income that way really high, but something to consider. But there are ways to mitigate taxes in that realm too. Second tax that most people come across, you may not see that as much, especially as an employee, because you pay a portion of it, it comes out automatically, is payroll taxes. and that is to help fund Social Security, Medicare, and there's caps around this, but a significant amount. It could be up to, for a self-employed person, up to 15% of your income is taxed. That's before income tax. So you imagine you layer in that they call them FICA, and so that's to help support Social Security, Medicare, and if you are self-employed, you have to pay both sides of that. So it can be very expensive to help fund that, and there's not really an option when you're making the money. This is the way that it's set up to be able to ensure that those programs are funded. And so it's something definitely can consider, because if you factor in, that payroll tax plus the income tax, I mean, you're well over the 50% at that stage for high income earners. Capital gains tax. Hopefully you have capital gains. That means it's part of investments that, whether it's in real estate, stocks, a business, this is an incentive. The capital gains taxes that the top is 20, and there are some extras if you really make a high income net investment tax. So it puts you in above 20, but at least that's lower than a lot of the income tax brackets. So, this is where the government, and if you have lower income levels, you can actually have zero capital gains taxes. So this is, again, shows you the incentive that they want you to invest in business, real estate, stocks, whatever, to grow your wealth, that they are going to tax the gains associated with that in a lower manner. Estate taxes. This is one that moves around quite a bit, and you do have to have a large estate for this to really matter in life. And I think depending on where the Trump tax laws go, they're still pretty high. I think it excess in the 14 million range, something like that, as a couple that is going to be immune from estate taxes. But that could always move around too, as you're trying to get more taxes into the coffers of the government. So that is always subject to change. And if the tax laws from Trump's administration sunset, then they'll go down to a lot lower levels. So more people will get ensnared by it. So, but this is really a penalty for dying rich. And it's a crazy thought to think about. You build all this wealth, whatever means, hopefully legally and, morally. And so it requires people to plan ahead and sort of to position potential assets into things that are not going to be subject to state taxes. But so that's another one that you have to be mindful of, because, it doesn't feel great when you've built a lot of wealth through whatever means, saved well, invest well, and then the government is going to take their big cut just because you die. And so there's requires a bit of planning ahead of time if you want to avoid those. And the one that's now coming up more in these days are tariffs. And these are just protectionist sort of incentives to tax things that are coming into a specific country. And now they might be, turning into sort of trade type wars, but those are just tax incentives to hopefully maybe manufacture locally and consume things more locally, and sort of create this protectionist arm around the country and the business associated with them. So a lot of obviously noise and information around that these days with the new Trump sort of administration and their approach he's taking with them. So those are really different types of taxes that we are going to encounter, and they require digging a little bit deeper to understand what they're trying to do with those taxes and how can you use them for your benefit. And so this is where you do need to go exploring a bit, especially your situation, and be around other tax advisors or financial folks and wealth strategists who really dive into the tax code and how to mitigate it legally, because there's no requirement that you pay more tax. Right? If you can, structure your investments, how you make income, whether through a business or through being an employee, those are ways to mitigate taxes legally by following the code, understanding the legal aspects of them and how to apply them. There are plenty of ways to do it, from, again, owning a business, owning real estate, investing in oil and gas, giving to charity, obviously, investing money in retirement accounts. There's just a host of ways on a personal and business side, but it's really important that you sort of get up to speed, learn about them, be around the right types of advisors so you have some more options for you to mitigate again, your biggest expense you're going to face in life. So if you can shave that down by 10, 15%, imagine the amount of wealth that could be built off of those dollars over the long run. Now, one of the second areas of taxes that maybe are not as sort of transparent and top of mind for folks is inflation. And inflation is just, I call it the stealth type tax, because essentially it's not an explicit one like I have to pay the IRS, but it's one where your dollars are actually buying less. They produce, you may have built a lot of wealth over time, but that $1 million doesn't feel like $1 million anymore. And so, inherent to that is a sort of this sort of implicit tax in there that, everything costs more, right? Homes, groceries, look at the stock market. You buy a share, certain things are more expensive, right? So because everything's more expensive, it feels like everything costs more and your purchasing power can't kind of give you the lifestyle you could maybe 10 years ago. And we see that. And most people feel that and recognize you, even if you have wealth, it's pretty apparent. And, just given the policies that have been created and the flood of money coming from the government sort of arm, the fiscal side of it, even in the last year, the flood of money, the deficits they've run, it's increased the inflation across it, and it's kind of sticky. And, it's requiring us to be more mindful of how we're storing and building our wealth to make sure that we can exceed it. Because imagine your investments are growing at, say, 7%, and inflation is maybe 5%, 3 to 5%. Well, say 5%. Then, really your real return is 2% in that scenario. Inflation is 5%, you've earned 7, and so you're barely keeping past your purchasing power based on inflation. And in a lot of cases, the inflation that gets reported from the government, there's a lot of people and a lot of folks who would argue that's way understating the true inflation that we all experience. So we really have to take aim of trying ways to maximize our dollars, make them do more, and exceed inflation so that you can have to get ahead, essentially, not just to keep pace, right? Staying with inflation is barely keeping pace with purchasing power. And unfortunately, a lot of people are experiencing that today because things cost more. They can't save, they can't invest. And so basically, just barely getting by and not able to save for their retirements and be positioned to buy assets. So, that middle class of society is basically getting damaged because of the policies set forth by our government and the fiscal irresponsibility that's happening. And so these are the types of things that us as, for the stewards of our own wealth, we've got to recognize what's happening and then put into place things that help us maximize our dollars, keep more of our wealth, put in assets and things that will grow and create cash flow over time, and get them into appreciating assets like real estate, like businesses, like stocks and bonds, things that are going to grow and have the highest chance. Bitcoin, maybe, right? Actually has been one of the highest producers over the last at least number of years, 5 or so years. So it's really important to do that over long periods of time, or our wealth just will not go as far. And that's just the way the system is designed today. And the unfortunate reality. And so a lot of people are getting left behind. And it's a shame. It's a damn shame. And so for us who are, trying to learn about these things, at least, gives us a higher chance to sort of try to beat inflation and try to ensure that we can outpace it. So we have higher purchasing power. Now, the last tax I like to share, and there's a combination of this because for people like you who are listening to this, you're trying to stay educated, stay on top of things. And that's trying to shrink this, what I call ignorance tax. And I heard this once first time from a business owner, entrepreneur, Alex Ramosi. And it really rang true to me that, there's an ignorance tax for not knowing certain things or not staying educated and continue to grow and learn that we all pay if we don't do that, right? The things we don't know or the people we don't know who know things that because we don't know them, right? We're going to continue to lose money and reduce our ability to earn or spend more than we should in certain areas because we don't know, right? If you don't know how the IRS and the tax code is set up, because you don't know some of those strategies, you are continuing to lose lots of money through the course of paying more taxes than you should, and what those dollars could earn. So there's an opportunity cost on top of that, right? On top of what you missed out on in terms of paying more. And that happens in a whole host of ways. Think about from a business standpoint, not knowing how to do certain things, sell, whatever, market, right? That's kind of an ignorance tax in some respects, because you have ways to maybe increase income through better business sort of structures and activities that will reduce that ignorance tax. But you see them in a whole host of ways, other ways like having the wrong business entity in place, right? It could be for overpaying for insurance or a debt, right? Because the approach you take. It could be, back to taxes very explicitly, maybe missing deductions or tax credits that are available for you in your business or personal life. And, which is often now I see as I work and meet with other business owners that, not efficiently planning for the exit of their business can cost them significant wealth in taxes through the course of selling their business and even, planning for their estate down the road. And so the point about this is that, you know, the ignorance tax shows up in all hosts of ways, and sometimes it's harder to quantify, but it really presses upon us to stay ahead, continue to get educated, be around experts that can provide us more information and empower us to, get ahead of this and make better decisions to reduce this ignorance tax over time. So when we think about the wealthy and they think about taxes very differently than most people, what are some things you can do about this? Well, here you are today learning a little bit more, and the tax code, there's probably not any tax professional who knows it completely, but this is where you have to get comfortable to start learning more about it, learning how the tax code is structured and what incentives are built in there that can be used in your favor, and being around not just historians who are reporting your taxes, but being around tax advisors and strategists who are thinking ahead and trying to plan for and being proactive around tax planning, right? That has to happen throughout the course of the year, not just when you're reporting it come April timeframe, right? You got to get ahead of it and plan ahead and learn about different options throughout the course of the year and sharing them with your advisors of what you have planned that may need some tax planning if you're going to sell a piece of property or get into a new business or sell a business. All those sorts of things require some planning and learning about what options are available within the tax code itself. Another thing they do is shift income, right? We talked about, the earned income for most folks, that's going to be taxed at the highest rates. Well, what if you can change that into a capital gain through investment or passive income through different sort of vehicles like rental, real estate, things that are more passive? They have different tax sort of structures to them that may be able to mitigate and reduce your tax bill for the income that you experience. And things that you get income from borrowing, right? Instead of liquidating an asset and paying the taxes, a lot of people borrow against their assets, right? That is not recognized as income, actually. So you only get a tax bill on even though you were able to enjoy and use that income. And, back to it, it's those who have jobs, and certainly I know what that's like. I had a job for a while. That's the highest amount of taxes that people pay, owning assets, whether you're business, real estate, stocks, whatever. Owning assets is really key to helping mitigate your taxes over time because that has more favorable tax structures to them, right? Depending on how you position them and when you sell and exit them, they really can be a huge benefit if you understand how those work. In terms of reducing costs, sometimes people could walk over dollars to pick up pennies because they get too frugal. And therefore, it's really important to recognize that there are experts out there and they're worth paying for, whether it be tax advisors or tax attorneys, estate planners, business strategists, right? Having a team of experts around you really to help give you better strategies or more integrated strategies is really important to consider, and they're worth paying for. I mean, they could be worth their weight. Like it's just like an employee. If you had an employee, if they can help you, double or triple your business, why would you not pay them a good salary, right? And pay them to help support you and give you leverage. That's what great experts in your life can do, can give you leverage on doing things that you just couldn't do yourself. And the last thing is to continuously learn and grow. I think for most people that I've run across who are successful, they are humble enough to realize that they only know certain things, and it just requires you to continue expand, build your excellence over time, build mastery in your craft, obviously the area that you're focused on, but start learning in other areas of your life to enhance your kind of overall financial picture. And it's kind of a lifelong journey. And that's what most successful people I've run across is what they do. They know that the value, whether it's skills they build or knowledge they acquire, that's only going to expand their value to themselves, their families, their communities, their clients, customers, etc. That has to happen to create more value, and they'll be handsomely rewarded for that. So with that, I really appreciate you joining me today and taking time to just learn. Obviously we covered quite a bit of broad strokes around this, but hopefully it gives you a feel for areas to maybe target and start thinking about your own personal situation and where you can expand upon ways to reduce your tax across the board from your business, personal life, and even what you're doing in your investments. So thanks for joining me, and we'll see you on the next episode of the Perennial Pride Podcast.
Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride Podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.